What's up, everyone? So today we're going to be talking about the risky yet incredibly high potential world of DeFi. And we're going to be talking about how you can use decentralized finance to compound your returns with crypto, and how that could also be potentially a good strategy to implement during a bear market. So with that, let's get to it. You can see that we have 8 labeled bubbles in this graphic up here. We have the derivatives market, we have real estate, global debt, US national debt, all the money in the world, which is the broad money supply, physical money, which is the narrow money supply, stock markets, and the market cap of gold. What is missing from this chart is Bitcoin, which would be even considerably less than gold. And you can see that this is a little bit dated of a chart, as gold's market cap is listed as just under 8 trillion, and the US national debt is still down at 21 trillion. So this is a little bit dated, but nonetheless, it definitely demonstrates the point that I'm trying to make, which is that the overall market and industry of finance is humongous. And you can see just the derivatives market alone is over $500 trillion. And all the money in the world, the broad money supply, is just under $100 trillion. So altogether, if you add all of this up, it's over a quadrillion dollar industry, which is the biggest industry in the world. So you can see that the greater industry of finance is made up of many different components, such as derivatives, or currency, or equities, or precious metals, or real estate. So we're going to be translating traditional finance into decentralized finance. So let's take a look at some of the bigger industries that decentralized finance is looking to take on. All right, to start, let's take a look at the broader DeFi industry. And this is going to be just the metrics for the top 100 DeFi coins. So you can see the total decentralized finance market cap is over 100 billion. So it's a pretty large market, but nonetheless, it is nowhere near a quadrillion dollars. We are still very early on in this progress. And I don't know what it is about this 40% ratio, but you can see decentralized finance applications to Ether is about 40% when it comes to market capitalization. That's pretty similar to what you see with altcoins and Bitcoin, where Bitcoin has been around 40% market dominance as of the last several months. So something about that 40% ratio seems to be pretty typical within crypto. And you can see the DeFi dominance versus the whole market is about 6%. So realistically, it doesn't make up a whole lot of the crypto industry, or as much as one might suspect, with how much it actually gets talked about. And I think that speaks a lot to the risks that you inherit with this industry in specific. Although this is an industry that has incredible potential, it is also an industry that is looking to take on really the roots of the traditional economy and society that we've built over the last several hundred years. Naturally, if this is going to be competing against government-issued currencies and big banks, governments all over the world really have a monopoly on money. So this is really the sector that would be the one that theoretically would put pressure on governments when it comes to cryptocurrency. That being said, because they are the ones in charge of regulations and policies, and there is no denying they do have a lot of power still, this is an industry within blockchain technology that is quite a bit riskier than your other industries that we might be looking at. All right, let's come down here and just take a look at a couple of the biggest projects within DeFi. So you can see we have Terra, we have DAI, Chainlink, Uniswap. DAI, you can see over here, is pegged to $1. which means that it's always within like a % or two of the US dollar because it's pegged to the US dollar as a stable coin. Hence the name, it's stable against the dollar. And it doesn't necessarily have to be the US dollar. It could be really any currency you want to peg it against. And we will look at that in a little bit. And then Chainlink isn't necessarily a DeFi-oriented application. It definitely does do a lot of great things for DeFi. But if I had to classify Chainlink in a single industry, I would probably count it more as interoperability rather than a DeFi coin. So keep in mind, a lot of these do several different use cases, but they all provide a lot of use case to DeFi regardless on this list. And if we scroll down, you can see this first page is about 100 coins. And there are 5 pages. Just the DeFi coins listed on CoinGecko, there's about 500 of them. And then there's probably another 5,000 that aren't listed. This is definitely one of the hottest industries for development within blockchain at the moment. If we scroll up here, you can see, again, that the DeFi dominance is 6%. But I would guess that if you look at a chart of the products and the projects that are being created within the DeFi sector relative to the rest of the industries, it would probably be my guess, and it is a guess rather than any fact. I haven't seen any actual numbers on this, so it is strictly a guess. But I think probably over half the projects being created are for a DeFi use case. There is a lot of competition within DeFi also, and we will look at more of the risks later on. But like I was saying, this is a incredible opportunity if it does work out, as the market cap of this industry could grow by hundreds of billions, if not trillions, in the upcoming years, if not more. So I want to be able to have a chance to go over all the great stuff that is involved with DeFi before we talk about some of the actual risks. So let's continue. All right, so this is a list of stablecoins. And as we mentioned earlier, a stablecoin is a coin that is stably pegged against another currency, and typically a fiat currency. And as you can see from this list, the most popular ones are all pegged to the dollar until you get down here where you get Tether Gold, where it is actually pegged to an ounce of gold. So you could actually get a stable coin on gold rather than a fiat currency. All right, and then over here we have decentralized exchange tokens, which are often referred to as DEXs, the decentralized exchanges. The most popular is Uniswap, which was the first big exchange that was utilized on Ethereum for ERC20 altcoins back in 2020 when we got the first part of the DeFi craze. And then you had other ones that started popping up on different chains as other smart contract platforms started to get more development and more users. There's more of a reason to start building other DeFi applications on these other smart contract platforms. So that's when you started getting some other big ones popping up, such as PancakeSwap, which was and is the big one for Binance Chain. And then you have lending and borrowing, which there is quite a bit of competition in this space. You often see either Aave, Maker, or Compound leading the charge. More recently, you've had Celsius Network get more popular also. And Kava is built on Cosmos. They're starting to get more popular. This is another part of DeFi that definitely has a lot of potential. All right, and now we have derivatives coins. And as we looked at that first image when we started the video, derivatives are over a $500 trillion industry alone. This could be one of the biggest industries in DeFi if it doesn't have any negative regulations that hinder its growth. As you can see, the top project is Synthetics Network, which does synthetic assets, which I find to be a very cool concept. Although Mirror Protocol down here recently, I believe, has probably taken the lead, in my opinion, when it comes to synthetic assets, as synthetics has taken a step back. They used to have a synthetic Tesla that represented a share of Tesla stock, but I've went on more recently, and I believe they got rid of that, whereas Mirror Protocol down here is continuing to add more and more synthetic assets, such as stocks or new currencies or indexes or whatever it may be. Anyone that doesn't have access to a bank or the ability to invest on the New York Stock Exchange can greatly benefit from a protocol like this, because there's a lot of people throughout the world that don't have access to stocks or American-based equities. With a protocol like Mirror, this would allow anyone in the world to effectively be able to participate in the global financial system when it comes to equities and risk-based assets. And then we have insurance coins, which has gone pretty under the radar for the most part when it comes to both being used and development. There is one big project that I'm aware of that is Nexus Mutual. And this is also a very big traditional industry in finance. So I believe that over time, there's a lot of growth to happen within the insurance part of DeFi also. And then the last one that we're going to look at really quick is going to be options. And options are contracts, derivatives contracts that are based on underlying equity positions, or at least in traditional finance. You can get options on really any sort of asset that you'd like with the blockchain, which is really cool. So what is an options contract? So options are basically like insurance for financial assets. All right, so this is a site called DeFi Pulse, and this is a great site to follow if you like DeFi. Gives you a whole bunch of different metrics and different stuff you can look at to get a better idea of how the DeFi sector is performing. So you can see DeFi has done some pretty insane percentages over the last couple of years. You know, we started down here, maybe not even started, but we were down here at 400 million back in 2018, jumped up to just under 10 billion, and now we're just off the highs up here over 100 billion. So this is a industry that is growing incredibly fast, and for good reason. As we've seen, the size of this industry is huge. If you can find the successful projects and you don't have any regulatory concerns going forward, you know, you could really do well in this industry. But you really have to do your research. Like I was saying, we can look at that here in a little bit at the very end of the video. So let's take a look at this site. If we scroll down here, it gives you a list of the top projects when it comes to total value locked. If you ever see TVL, when you're looking at crypto analytics, the TVL stands for total value locked, which is what we're looking at right here. When you come to the page, it's just going to give you the whole DeFi sector. So you can see lending, DEXs, assets, you know, but if you're more interested on trying to pinpoint one sector within the industry, you can come over here and get a little bit more specific with your research. Just for the time being, I thought it'd be fun to look at some of the top projects. This Curve Finance is really doing well. So Maker's always been around. They haven't necessarily been the top project throughout the last 2 years, but I would say they've been within the top 3 pretty consistently over the last 2 years. Maker seems to be a pretty safe bet when it comes to DeFi. That's even considering what happened back in 2018. There was a problem with the protocol and a lot of people lost a lot of money. We've recovered from that and it's back up to its number 1 position. So I think that shows it's pretty resilient. All right, and then we can come over here to this site called stakingrewards.com. We went to the tab called DeFi. It's also got stablecoins and lending, which we will look at right up here. But you can come down here and we have it filtered by rewards. So it's showing us the highest reward tokens that it has listed on this site that receive rewards from DeFi. And you can see there's some pretty high rewards, 6,000% without inflation or some kind of protocol error sounds pretty hopeful, but I guess we'll see. This is a very big project. This is something that Mark Cuban has been playing around with, and a lot of people seem to like it. I do want to mention, while I am pretty interested in DeFi, I do think that the risks involved, which are both legal with regulatory and being a new technology with new protocol systems, I think there's quite a bit of risk that you have for things going wrong. And then that risk gets compounded when you consider how many different projects are being implemented in the space. Personally, at the moment, I'm taking a little bit of a step back with my investments with this space specifically. I do believe that there is a lot of potential. I just want to sit on the sidelines for a little bit until I get a little bit more clarity that gives me a little bit more confidence in this space. I do have a little bit of my portfolio dedicated to it, although I would say that it's probably underweight for what I would like it to be if we had better regulations in the space and there was more clarity regarding that. I think that that would definitely support an environment for me to dedicate more of my portfolio to DeFi. As of recently, I haven't really kept up with the individual projects quite as much, so I'm not as familiar with the individual codes behind each individual product as much as I was with that several years ago. So I want to stay away from doing too much individual analysis on these projects, just because I don't think that's something that I can offer a very in-depth analysis on when it comes to most of these. My thinking behind that is that we are in one of the most volatile periods of our lifetime when it comes to macroeconomics. Following the macro and spending my time digging into that has been definitely a very good use of my time, as I have a pretty good feeling of where the economy's at, and I am pretty confident in my decisions going forward in aggregate. So my goal really has been, with limited time, to dedicate more of my focus to the macro side of things rather than the micro. So I'm trying to look at more of the big picture at the moment, rather than digging into individual projects at a very in-depth level. That being said, I have looked at a lot of these projects, so it's not like I don't know any of these projects or anything. It's just I don't want to comment on it until I have a better chance to go over and get caught up with a lot of this stuff. So with that, let's move on to stablecoins. All right, so you can see here, this is a list of stablecoins, and right here is the column for rewards. And you can see Terra USD, ticker UST, is a stablecoin pegged to the US dollar and is offering rewards of over 20%. And I believe there's a protocol called Anchor that you can combine with to increase your rewards up to about, I don't know, I think I remember hearing something close to 40%. But if you're doubling your interest, there is going to inherently be some kind of risk that you're adding to the equation. And as I was saying before, I haven't really had a chance to keep up with all the new projects. So as you double the interest on your stablecoins, that's inherently adding some sort of risk behind the scenes. And as mentioned before, I haven't been keeping up with the individual projects that have been released, as there have been so many of them over the last year in DeFi. So I don't know exactly the risks that you're inheriting behind using I believe it's called the Anchor protocol. That would be something that might be worth looking into if you are trying to dedicate the time into the DeFi space to look more into this. But stablecoins, considering that they are algorithmically linked to a dollar or whatever currency that you choose to put your money into the stablecoin for, that's a pretty good way to play a bear market, because you're not in any risky assets when it comes to a traditional perspective of the word, as the price of the stablecoin is always going to be pegged to the underlying asset, which is typically the US dollar. So, I mean, if you were to sell your crypto projects into US dollars for a pullback to buy in later or whatever your strategy may be, you could just as easily accomplish the same thing by going into a stablecoin. And then you could also get 20% on your stablecoin. Whereas if you wanted to lend out your US dollars in a traditional manner, that would be through fixed income. And, treasuries, the 2-year is at just over 1%. And the 10-year is not even at 2%, just under 2%. So you're really not getting any yield on your US dollars, especially if you consider inflation, because that's just a nominal yield. If you add inflation to get a real yield, that would be your nominal yield minus inflation equals real yield. So a nominal yield of 2% on a 10-year minus inflation of 7% would get you about -5%. Just holding any kind of fixed income at the moment really doesn't make any sense when it comes to maintaining purchasing power, which is, I think, a reason why we're seeing a bid for gold at the moment. But that's a story for a different video. Just to bring it back to what I was talking about earlier, getting 20% on something that's stable with a US dollar is big, especially when it comes to investing for a bear market, as you're not inheriting any traditional risk from investing in a risk asset. There is risk due to protocol and regulatory circumstances behind a stablecoin rather than a typical fiat currency. But when it comes to it, you're not investing in a risk asset, which is the point I'm trying to make. And you're still able to get 20%. Or if you want to add on more protocol risk, you could probably even get that up to upwards of 40%. So that's something I will leave for more research in the future. If you guys want me to do a video on that, I can dig more into it and put something else like that out. But I don't want to talk about it until I am able to really hone in on the details a little bit more. So let's move on. And one last thing I wanted to mention really quick about stablecoins is that they don't have to be stable against the US dollar. Let's say the US dollar wants to continue on lower down to, say, 80s or 70s levels. If you're charting the dollar, you have to be pricing it against something else. So that's going to be other currencies. So if you're looking at the DXY, you're looking at the dollar against developed market currencies, and mainly the euro, as it makes up about half of the DXY. Not exactly half, but about. And if you're looking at something like the CEW, that's Wisdom Tree's Emerging Market Currency Fund. So it would be comparing the US dollar to emerging market currencies. But if the dollar's, going down, that means developed markets or emerging market currencies are going up against the dollar. You could theoretically, if you use dollars as a unit of account for your daily life, you could get a stable coin that's, I don't know, just for example, I don't have any reason for using this example, but let's just use the Chinese yuan. Get a stable coin that's pegged to the yuan. And if the yuan outperforms the dollar, you're gaining purchasing power from appreciation of the yuan against the US dollar, while not investing in an inherently risk asset and getting, I don't know what the yields would be on it because we don't have an example, but I don't know, let's just, for sake of example, 5 to 10%, So that would be another strategy that you could use depending on different circumstances with the economy and how things end up actually playing out. So with that, let's move on. All right, and here we're going to look at lending. So these are yields that you can get on lending, and let me just filter this by reward really quick. All right, so you can see here that, say, if you owned the graph, you could go out and lend this, and you could get yields on lending out your crypto for 17% in the case of the graph. Or Polkadot, you could get 14%. Which I believe is actually higher than the staking reward. I want to say the last time I looked at the staking reward, it was somewhere in the 12s, but don't quote me on that. I mean, you can, even a lot of these that you can actually stake. sometimes you can actually get a better percentage from lending it out, but you're also creating a different risk to reward profile for your investment. So it's something that you have to do a lot of research into to make sure it's the right fit for what you're trying to accomplish. And then really quick down here, you can see we have the euro and the British pound. And just like I was mentioning before, if you wanted to say if you thought the euro was going to outperform against the dollar, you could come over here, get you some euro stable coins. I don't know if this is a stable coin, but just for the sake of example, I believe it is. You could get 11%. So that's a lot better than investing in some sort of traditional fixed income. And then over here, I just wanted to really quickly show you guys a site that's really good for checking to see what projects have fixed max supplies. So that way you can try to reduce the effect of inflation that you're going to be experiencing on your crypto portfolio over time. Over here, you can see Uniswap was one of the DEXs, decentralized exchanges that we were looking at earlier, the biggest one. And you can see it does have a max supply. That's just one thing that I like to look at regarding individual projects to kind of just compare them and weigh out the pros and cons of each individual project within each individual industry and sector. All right, and I really like the lending and borrowing sector of DeFi. So I wanted to show you guys some cool ways that you can go about lending in different fashions within DeFi. So here is a project called Aave, and this was one of the first big DeFi projects that blew up in 2020. So this is one of the OG projects for DeFi right here. And if we come down, you can see that they have all kinds of different assets that you can put into a liquidity pool and earn a APY on. That's something that you guys can play around with if you're interested. And then, as we mentioned earlier, we were talking about Mirror Protocol. It was the one that I said that I thought was making some pretty good progress when it comes to synthetic assets. And you can see down here, you have the M Microsoft. The little M before just is their little way of branding to show that it's a mirror synth. So you have Microsoft, you have NIO, which is a Chinese electric vehicle company, and they do autonomous vehicles also. So it's pretty much China's version of Tesla, the closest thing that you can get out there. You have Google, PayPal, Netflix, Starbucks, the NASDAQ, AMD, Twitter, Coca-Cola, NVIDIA, Airbnb, you even have the VIX volatility index. So there's just so much potential within synthetic assets. This is where you can farm. So they have different liquidity pools that, let's say you wanted to get Microsoft, but you wanted to go lend out your shares of Microsoft. Even though they're not real shares, keep that in mind. You're not getting a dividend from Microsoft if you invest in this. But you can replace the dividend by lending it to someone and probably get a better yield on your investment anyway. So this is definitely something to keep watching as we continue development within DeFi going forward. All right, and then this application is called Tin Lake, and it's a subsidiary product of Centrifuge, which is a DeFi protocol for real-world assets. Oh, right up here. This is their mission statement. Tin Lake, or Centrifuge, pretty much the same thing, is an open DeFi protocol and marketplace for real-world asset pools. Investments can earn rewards in Centrifuge tokens, which is really cool. And if we come down here, you can see they have silver. No. Sorry, that was just the name. If we look down here, real estate bridge loans. So you can get some exposure to real estate finance, a market of risk-weighted assets. Or no, that's, I'm thinking in traditional markets and banking regulations, RWAs are considered risk-weighted assets. So I just saw that acronym and that's what my mind went to. In this case, it's real-world assets. So excuse me for my mistake saying that. And then they have fintech, emerging market consumer loans, commercial real estate, payment advances. This is going to be something that has a lot of room to grow. There's not a whole lot available at the moment, but I believe this is definitely a project that has a lot of room to grow. This only has 63 million of TVL. TVL, total value locked, the total DeFi space is over 100 billion. And this is one of the better projects in DeFi protocols for real world assets. So I think this one definitely has a lot of room to grow. And I'm excited to see what kind of cool stuff that they end up doing in the near future. Let's move on to the next one. All right, so this is called Ocean Protocol, and it's the Ocean Marketplace. And Ocean does data. So all of these are different data sets, as you can see. So it's decentralized, so they need liquidity pools for the data sets. So you can go in and stake your Ocean, or maybe not stake. Stake would be not the best word in my opinion. You could go in and park your Ocean in this liquidity pool and earn a yield as people use this data set. But you're also inheriting the risks that do come with the DeFi. So it's a liquidity pool for a data set, but you're inheriting the same risks. So keep that in mind. All right, and over here we have a game called Splinterlands, and Splinterlands is hosted on the Hive blockchain, and I believe, don't quote me on this, but I believe I remember seeing it on Tron back in like 2017, but this is one of the OG blockchain games. So within the game, I guess let me explain it a little bit. This is a card game. As you can see, they have different cards, and within the game, you can either buy cards or you can win cards from playing, although it is pretty hard to win cards just starting out. You do have to put in the work to actually get the cards, the good cards, to really rank up. But you can also come over here and rent the cards. So let's say you don't want to play for 6 months straight to get the really good cards, just grind out the process, and you don't want to go spend a couple $100s on the good cards just to skip that process. You can come over here and rent the good cards out. So you can grind out the process, but you can also kind of pay to play to win a little bit, and kind of skip ahead and make the process a little bit faster by renting. Because a lot of these really good cards, you can rent for pretty cheap. Like you can get this one right here for 11 cents a day. And I really haven't played this game in probably over a year, so I don't know all the new stuff that's going on with it, but this seems like a pretty good card. So to get it for 11 cents a day, if it really makes a difference to be able to get better cards and level up and get better rewards from the game, considering it's a play to earn game, this sounds like a pretty good deal. You know, you can get the good cards and then just rent them out. So you don't want to play for a couple months, you know, you can go rent out your cards. And it's all handled by the blockchain, so you don't have to worry about tracking someone down in a different country that doesn't want to give you your cards back. Or, you know, it's all pretty efficient. I think blockchain gaming and play to earn gaming is going to be a very big onboarding process for a lot of traditional people and retail investors. So I really like blockchain gaming and play to earn, so it's definitely something that I hopefully can put out some videos in the future. So if it's something you guys are interested in, let me know in the comments. And with that, let's move over to one more. All right, so one more play to earn game. So this is not a card game. This is something that resembles, I would say, slightly League of Legends, as it's a MOBA. I don't even know what MOBA exactly stands for. I'm not a big gamer, but I do really like the blockchain space when it comes to gaming. So this is pretty similar to League of Legends from how I understand it. And they have different skins that you can get for the characters. And you can go out and rent these skins out. So I don't think it really has as much of a use case as the last game we looked at with the cards, being able to get a better deck sooner. I think this is more cosmetic, but nonetheless, it's showing you that all of these DeFi concepts are also being applied to other assets, such as NFTs or real world assets or even data sets. The whole industry of DeFi is going to be huge, in my opinion. All right, and if you guys aren't as excited about DeFi, or you guys don't have the time to actually pursue figuring out how to actually go about making DeFi work, because there is a pretty steep learning curve, you know, going from zero blockchain knowledge to being able to implement DeFi in an effective manner is probably going to take tens, if not hundreds of hours worth of research to actually do successfully without making any mistakes or aping into some rug pull project that you end up losing all your money. It's definitely something that requires some due diligence to do efficiently and effectively and successfully. So they also have CeFi, I'm going to call it CeFi, Centralized Finance. I don't know if that's a real word, but I don't even think DeFi is technically a real word, but CeFi, we'll call this CeFi. These are more centralized companies that offer similar products to DeFi. This one's BlockFi. Let me go up so you can see the logo, BlockFi. And these centralized finance companies, they make you do KYCs, and it's a lot more of a process getting it set up because they need to know everything about you to pass over to the regulatory bodies like the IRS and SEC if they want to get audited or whatever it may be. Oh, look, you can even see here, this caught my eye and it's pretty relevant. Click here for important regulatory developments regarding BlockFi interest accounts. So we can talk about that more here in a little bit, but I want to focus on getting through this concept a little bit first. So these CeFis, they really don't have quite as many assets as a lot of the DeFi protocols, just because they do have to go through a lot more of the regulatory hurdles, and they have to do a lot more due diligence to make sure that they're not putting some pump and dump project up here and making everyone lose all their money. That's one of the things that you have to pay attention to when you're getting into these centralized finance products, is that there's not quite as much of a selection to choose from. But you can see they have Bitcoin, Ethereum, Litecoin, Chainlink, USDC, which is a stable coin, GUSD. I'm not exactly sure what that is. PAX, they have PAX G, which is PAX Gold. USDT, BUSD, so mostly stable coins. They do have a couple other actual cryptos that you can lend out. Getting an interest on your Bitcoin is awesome. You know, not being able to stake it, or if you don't have the ability to do the mining yourself, just being able to lend out your Bitcoin is a really cool concept. So I personally don't have any experience with BlockFi or Celsius for that matter, which is going to be the next one we look at. I have been interested in getting involved with them just due to the simplicity of it, but because of the regulations and all of that, I feel more comfortable with DeFi personally, although I think this very well could be something to do your due diligence into and look more into if you're interested and don't know quite as much about DeFi. So with that, let's look into the next one, which is going to be Celsius. So Celsius, you can see they have a lot of different stable coins. They also have gold. We were mentioning PAX G is the gold token. They have more cryptocurrency selection. You can see they have quite a few to select from as opposed to BlockFi. But if you come up here, you can see that you are getting about 9% on your stable coins. So you can go out and get a stable coin and come over here. You don't have to worry about screwing it up yourself if you don't know how to work the protocols with DeFi. You know, you can just download the app, click a couple buttons, and they'll do it for you. And you can still get 9% on your stable coins, which is pretty cool. And then again, I do want to mention, I don't have any personal experience with BlockFi or Celsius because of the recent news that they've been having with the regulations and the conversations with the SEC and everything. So I just want more clarity on what decisions are going to be made going forward regarding all this before I get too involved with either one of these. I do have a lot more experience with this protocol in this application. This one's called crypto.com. They also have a DeFi wallet, so they have the crypto.com app, and then they also have another app that is a DeFi wallet. I think this one's probably a little bit better to look into than BlockFi and Celsius, but that's more for my personal liking, so That's my opinion. I like crypto.com. And as you can see, they do several different terms. You can do flexible, which means you can lend it out. And let's say you change your mind after 1 day. You can go and cancel the loan and get your money back after a day or 2 days or a week, or you can keep it in there for 10 years if you want. So flexible pretty much just means you get a smaller rate. As we can see, we'll just look at Ethereum 3.5 as opposed to 3 months. You get 5.5, but you're not locked into a date range of say 3 months, to where as soon as you make that loan, it's in the contract for 3 months. And that's assuming you have a stake of $400 or less. So basically just, you don't have to have any CRO stake, which is their native token, the crypto.com token. If you do have more, so you have $40,000, you can bump that up to 8.5% for Ethereum. You can even get up to 14% on your stablecoins, which is pretty cool. I personally do have experience with crypto.com. I've never had any problems with them, and I really like the application. So I will continue to use it whenever I need services like this. I do want to show you one more cool thing regarding crypto.com. I'm a big basketball fan and a Kobe Bryant fan, so crypto.com just bought out the rights to the Staples Center Arena, which is the home court for both the Los Angeles Lakers and the Los Angeles Clippers. One of the most legendary arenas in all of sports history just got the naming rights bought out by crypto.com. So anytime you guys watch a Lakers or Clippers game, they're going to be talking about the crypto.com arena, which is pretty cool, in my opinion. All right, so we now know how much potential DeFi has, and we know that there's a lot of different strategies that are available to actually go out and create a DeFi strategy that works well for just about anyone. I would encourage everyone to go do their own due diligence regarding DeFi, because the opportunity is there. There's a lot of potential regarding it. And I think that as long as we don't have any major regulatory concerns, I think that the space should do pretty well overall over the next decade or two. So with that, let's get to the risks regarding DeFi. So here you can see that we have the SEC chair, Gary Gensler, and this is an interview that they took a clip from it and put it on CNBC. It's not necessarily an interview. It was a clip from when he was testifying at Congress. I think this is it right here, the actual interview if you want to watch the whole thing. It's 2 hours long, so they definitely go over quite a bit. And I don't think it's all regarding crypto, if I remember right. I did watch a good portion of this when it did come out, but they do talk a lot about crypto regulations also. So really quick, let's play this video just so I can show you what the current mood is regarding not only the SEC, but the politicians also, because it's not just a whole bunch of people in the government that hate the idea of crypto. There's a bunch of people that are for it, and there's a bunch of people that are against it. This video does a good job of kind of demonstrating that there's not a lot of agreement on crypto at the moment, and more specifically DeFi. I think this is regarding stablecoins. So let's get to it.
Now let me turn to cryptocurrencies. And my time is limited, so I'm going to try to do this as efficiently as I can, Mr. Chairman. But I think I know your position, among other things, is that not all cryptocurrencies are inherently securities, right? That's true.
There are a small number that aren't, but I think that, as Chair Clayton said when he was in front of Congress, I think very many of these facts and circumstances are investment contracts.
So here's my concern. So some are and some aren't is basically what you're saying. And I'm concerned that the SEC has not provided sufficient definition and explained how it would apply the Howey test, which I think is the court standard for determining when something is an investment contract. So, for instance, stablecoins do not have an inherent expectation of profit. They're just linked to the dollar. Now, you might use them in an attempt to make a profit, but that's a second-order activity. Is it your view that stablecoins themselves can be securities?
I think that, Senator, they may well be securities. As Thurgood Marshall wrote in the Reeves opinion, in defining the scope of the market that Congress, wished to regulate, Congress painted a broad brush, and it actually included about 35 different things inside the definition of a security in the 33 Act.
I've just got limited time here, so I acknowledge that. Here's my problem, though. I think what you just said was that they may be securities, or that some are securities. To me, a stablecoin doesn't meet the second prong of the Howey test, that there has to be an expectation of profits from the investment. And so if it doesn't meet the Howey test, it looks to me like it's not a security.
Right. So, yeah, you guys can see basically just the point that I wanted to make by showing this little clip was that there's still a lot of communications to be had regarding the regulations of crypto and DeFi more specifically. You know, that's kind of a book that still needs to be written, and we don't know how that's going to play out. So you got to be honest with yourself and at least address some kind of risk that is involved with that. And to be honest, I really don't know how much of an impact this is actually going to play over the next 5 to 10 years. You know, a lot of these politicians, they like to talk big and then really don't have a lot of bite to back it up. So I think this is probably going to end up being something similar to that, to where they start throwing around ideas that sound pretty heinous, but at the same time, they're probably not going to be able to get a lot of this stuff actually passed through, because there are a lot of people who actually understand this stuff a lot better than a lot of people that don't understand it and don't take the time to understand it. So ultimately, there's going to be a lot of people fighting for DeFi and a lot of people fighting against DeFi. But I think overall, at the end of the day, when all of this is said and done, I think that there's not going to be any major problems regarding regulations. And I think the regulations will actually be a good thing for the space, because it's going to provide more clarity. You know, even sitting here listening to me talk about it, you know, I'm pretty open to risks when it comes to investing, but this is just something that even I'm pretty concerned about when it comes to regulations. And it's not something that I think is going to be doom or gloom. It's just something I want to know more about before I dedicate my capital to it in a bigger way. So I think when it's all said and done, we're going to end up looking back on the regulations and probably writing them off as a good thing rather than a bad thing. But until then, I think there's going to be some volatility that's associated with it, some ups and downs in the markets regarding what he said and what she said. I'm just trying to avoid that volatility and reduce my risk profile. That's my thoughts regarding regulations. Another major risk regarding DeFi is that this is a brand new space. I mean, DeFi really only took off back in 2020, as we seen earlier from the graphs we were looking at. And a lot of these protocols are pretty innovative, which means that a lot of them do have loopholes that can be exploited. So you really need to do your due diligence on each individual project and look into the code and make sure it's audited and there's no loopholes that can cause big hacks or liquidations or whatever it may be. As you can see from this article, it was a while back, but you can see hackers steal over $600 million in the biggest DeFi hack of all time. This was the Poly network. And you can even see, despite the news, the market remains stable. I mean, I don't think it's really all that big of a risk if you do your due diligence. But at the same time, there are so many of these projects coming out that it's hard to really take the time to do the due diligence needed. And therefore, I think you're actually exposing yourself to risk in that manner. Albeit, I think it is a risk that you can manage with research. And you can see over here, I just wanted to point out this situation as it's one of the biggest events that has ever happened in all of blockchain. Less than 3 months after its launch, the DAO was hacked and 60 million of Ether was stolen. The Ethereum blockchain on which the DAO was built was later controversially forked to restore the stolen funds, which were returned to investors. So if anyone remembers Ethereum Classic, that's the story of why Ethereum forked from Ethereum Classic into what we know Ethereum as today. And it was all because of a protocol hack. These things are real, and they can be a very big event in certain circumstances. So that's why I say do your due diligence when it comes to DeFi. There's a lot of good projects, there's a lot of potential, but there's even more cruddy projects, and there's certainly a lot of risk. That being said, it's all risk that can be mitigated for the most part with due diligence and research. So just make sure you know what you're doing and you're confident with what you're investing in. And then I just wanted to point out one more time as another risk would be the amount of projects being built in this space. You know, as soon as we go through another bear market, as you've seen from the last bear market, a lot of the smaller projects end up dying off over that time period. They either run out of funding or just lose interest, or there's a lot of people who leave the space during a bear market because they're not making money. So there's less users, and it's just a lot harder to gain traction as a smaller project going through a bear market. And with this many projects being built in DeFi, I think that's a pretty concerning aspect of the space, as a lot of these are probably not going to make it through the next bear market. If you can find the ones that do, you can definitely get a really good discount on them, but I think considering the whole space, it's going to be few and far between. So that just goes right back to my point. With DeFi, it really comes down to doing your research and doing the due diligence needed to actually be successful in this space. There's just so much going on and it's moving so fast. If you don't have the time to dedicate researching every individual project, you're probably going to end up falling behind and exposing yourself to more risk than is necessary. Just keep that in mind if you plan to get involved with the DeFi space going forward. And I just want to mention one more time, just because we talked about the risks, I want to bring it back one more time to its potential. We looked at that chart earlier that showed that the total value of finance in all of its sectors is probably over $1 quadrillion. So this is the biggest industry in the whole world. And it's something that blockchain really has an opportunity to excel at due to the currency layer of the development side of the perspective. So just keep in mind that while there is risk, this is definitely something that would be worth your time to look into and at least consider. Some of these coins could realistically be some of the best returns on investment over the next decade, assuming everything goes well for the industry. But keep in mind that there is a lot of risk, and there's a lot of projects that you can invest in and you will lose your entire investment. You'll lose 100% of your investment when these things go under. But that's not going to be all of them. So just make sure you do the research and know what you're doing. So I guess that does it for DeFi. I hope this video provided you guys some value and maybe some ideas of some different ways to go about getting some yield during a bear market. So with that, I guess let's wrap it up. Like this video to support the channel, comment below to let us know what you think about all of this, and subscribe with the bell icon to receive notifications when we post content like this. All right, everyone, as always, stay one move ahead. Have a wonderful day.